Alright, welcome back. Today is day 6 of us trading futures. So I didn't happen to make a trading video yesterday. I was so tired from this trade. It was so exhausting. So I thought I would make it Tuesday morning. So here it is. Today I took 4 trades. I took 2 winning trades and 2 losses. So first trade was an order block trade. So we had 950 to 1010 macro coming back into this order block, so respected that clean. So this is a bullish order block. So guys, we only trade pure ICT here. We do not be mixing in other concepts. You'll never see me draw a trend line on my, you'll never see me mark resistance or support. And those of you who are talking about support and resistance, I'm not marking any of that. I know everything that goes with them, and I know that they didn't work for me. So we had 9:30 open up, we had a big move higher. So this is a rally. Now we had a base, and so this was a rally base rally move type of kind. So that is beginners market structure. So I was targeting previous daily high, and so this high was my target, and this high, as you can see, that and that. So these were my draws on liquidity, and I was so confident that the market is going to take it, because we had this market drop into this fair value gap right here. So this is a simple walkthrough throughout the daily chart. So this was an order block, as you can see right there. The market dropped into that. Last week the market came back, tapped that, and then we had a move higher, closing above this Thursday's trading day, and made this an order block. So the market dropped back into this daily order block, and we happened to manipulate and leave this low protected and this low protected. So I expected buys or this day to flip bullish. So we had this high and this high in close proximity. So if I can go back to the 1 minute time frame, so I was targeting this and that. So this was buy side and buy side. So this was an order block after the market had rallied, showing its intent to take out these highs right there. I can make this. Okay, so I entered off of this candle's low. Got stopped out in profit. Stop loss was below that. I got stopped out in profit around here, because I didn't expect the market to come back and take out this low, but it did. Then I waited for the 1050 to 1110 macro. I entered again off of this mitigation block, or you can call it a breaker. That, so I'm calling it a mitigation block because this low didn't take out this low. So I have a low that was protected and the market rallied higher. To mitigate the losses that were made by the buyers in this sell move, this becomes a mitigation block. The market respects that to help buyers mitigate their loss in form of this sell, that the losses that they attained in this sell move. The market gives them another chance to the buys at that high as a mitigation block, because it didn't go below this. So there was no intention of selling, and the market sold off. That means the market has to make it back to them, because they were right, and by making it back to them, their losses are mitigated at this mitigation block. Now it is a breaker in that we had a low that was taken off, like this was minus sell side taken, there. So this was minor sell side taken. This makes it a breaker because our breaker is a low, high, lower low, and a higher high. So we had this low as this, a lower low right there, and then a higher high. So this makes this a breaker, but it is a mitigation block with response to this low right there. I hope you grasp that. Then I took this was trade number one, got stopped out in profit of $200. Then the market rallied, entered back in here. Stop loss was below this low, got stopped out. Market ran my stop loss right there. Because I entered off of this retracement and the market just dropped and took me out. So then I entered this closure above the new weekly opening gap. If I can show it to you. So this is the new weekly opening gap high, this is the new weekly opening gap low. So I entered off the closure above it, then the retest. So I entered and the market rallied, went back lower. So this was the market moved with deep retracement. So I had to be assured of my stop loss placement and trade management. So I entered off of this right there. Stops were below this low. Why were stops below this low, not this low? Because this is a breaker. In response to this low, I have a low, high, lower low, and a high high. So this is a breaker. This is a bullish breaker block. That is a bullish breaker. So I didn't expect the market to come back and take out this. Also, stops were below that low and below the new weekly opening gap. So the market rallied, came back into, took me into deep drawdown, and had consequent encroachment of that new day opening gap. Let me take this off. New day opening gap, new weekly opening gap, and the opening gap that was Monday. The market came, tapped half of that, respected, and then we rallied higher. So right here, I happened to get out at this high. Wednesday's high. Right here we had a deep retracement in the PM session, and then the market rallied and took us out at full take profit. So I'm going to let you enjoy the trade. I'm going to leave you to enjoy the trade. that was the trade I took. Hope you saw the deep retracements. So this was a real nightmare for me. This was a scare. But after take profit, that's how the market moved, went back. But all in all, it was a nice trade. Due to forex reward ratio, it was a 1:5 risk to reward ratio. So it was a cool trade. And let's see what today delivers.